Hello investors, this is a video on Hindustan Foods Limited. This video is brought to you by SmartInvestor. Like our videos, share our videos and subscribe to our channel. Click on the bell icon for new video notifications. This video is for investment purpose and any investment you should consult your financial advisor. In this video, we will cover the performance of the company for the second quarter of FY23 and is based on the investor presentation submitted by the company to the stock exchanges. An overview of the company, and let's look at the key parameters. Net worth of the company is at 423 crores, gross block is 915 crores, earnings per share of 4.26 and net cash generation is 24 crore. Total revenues are at 1,297 crore, a 3% growth year on year. EBITDA is at 107 crore, 29% growth year on year. Profit before tax stands at 61 crore, a jump of 26% year on year. Profit after tax is 48 crores. Key business highlights: the factory being set up in Guwahati, Assam for manufacture of juices is progressing well and is expected to start commercial productions in fourth quarter FY24. Company's capex plans for setting up the soap and parts project was commenced in first quarter FY24 and continues to ramp up satisfactorily. The upgradation capex in the beverage facility in Mysuru for the new MNC customer was completed and commercial production started in the month of October. The company is raising funds to the tune of 400 crores in the form of preferential warrants to be used as a growth capital. Company plans to invest 100 crores to set up, acquire and invest in areas of sports shoe manufacturing. As part of this capex, company has executed a share purchase agreement to acquire 100% share capital of KNS Shoetech Private Limited. The board has authorized investment of 75 crores for setting up a greenfield ice cream facility. The company's acquisition of the Baddi factory is delayed due to statutory approvals. The management is now expected to close this for Q3 FY24. Let us look at the manufacturing of shoes. Company has executed a share purchase agreement with KNS Infotech to acquire 100% share in KNS Shoetech. KNS Shoetech is engaged in the business of manufacturing the entire portfolio of sports shoes and sneakers. The company has a factory located in Kundli, Haryana and is currently manufacturing the entire portfolio of sports shoes and sneakers. Company is looking forward to strengthening the position in future by additional capex and expansion. Indian sports shoes market has witnessed remarkable growth in recent years, driven by the increased consumer awareness about fitness and sports, along with the surge in demand for comfortable and fashionable sports footwear. India is one of the largest markets for sports shoes in the Asia-Pacific region. The industry comprises both domestic and international players with brands like Nike, Adidas, Puma, Reebok and domestic brands like Bata and Lakani, among others. Company plans to invest up to 100 crores to set up, acquire and invest in sports shoes manufacturing. A strategic move in the first bet on thriving sports shoe space in India. The company is focusing on ice cream industry. Initial setup is wholly owned subsidiary of HFR Consumer Products, successfully set up an ice cream plant in Uttar Pradesh at a cost of 125 crores and commenced in fourth quarter FY22. Expansion of ice cream plant in Uttar Pradesh was carried out at a cost of 75 crores. The company has completed it in fourth quarter FY23. The board has authorized investment of 75 crores for setting up additional greenfield ice cream facility and increase per capita consumption, increase reach of e-commerce and decentralization of supply chain. First half of 24 consolidated results are given here. Revenue is at 1,297 crores, a jump of 3%. EBITDA is up 29%, is at 106.9. Profit before tax is 26% up 60 crores. And profit after tax is at 48 crores, a jump of 42%. Let us look at the second quarter FY24 consolidated results. Revenue is at 677 crores, a jump of 9%. EBITDA is at 55.6, a growth of 8%. Profit before tax is 31.2 crores, jump of 6%, and profit after tax is 24.7%. This is the consolidated balance sheet and profit and loss of the company's second quarter and first half of FY24. In the second quarter FY24, the company has clocked a revenue of 677 crores, gross profit of 81.8 crores, EBITDA of 55.6 crores, EBIT at 43.8, profit before tax is 31 crores, and profit after tax is 24.7. Let us look at the first half of FY24. The revenue is at 1,297 crores. Gross profit is of 157 crores. EBITDA is at 106 crores. And profit before tax is 60 crores. Profit after tax is 48 crores for the first half of FY24. Summary of consolidated cash flows. Operating profit before working capital is at 107 crores in 23 compared to 78.1 crores the previous year. Changes in working capital is minus 82.7. Cash generated from operations is 24.5 crores in 23 and it is 43.8 crores in previous year. Net cash from operating activities is 24 crores and cash and cash equivalents at the end of the period is 37.1 crores compared to 27 crores in the previous quarters. Let us look at the performance of the company in the last 6 months. The share is currently quoting at 490. The company has share prices at 669 rupees and year low of 493. Last 1 year, the share has stagnant and has given a negative return of 4.72%, a down of 27 rupees. Last 6 months, the share price has dropped by 20 rupees. In terms of percentage, it has gone down by 4%. In the last 1 month, share price has gone down by 2% and a loss of 13 rupees. The share has been trading very flat because of the diversification into unrelated areas. Investors feel that the diversification into the shoes is something which is experimental. The shoe market is having a huge competition and the margins are very low. In view of these unrelated expansions, there is not much of investor fancy in this share. Long-term investors can track the expansion plans and the sales figures for the shoe segment, while the ice cream segment is likely to do well. Investors should consider investing in the share only after evaluating the performance of the company in the second and the fourth and the third quarters of FY24, and if there is any improvement in the operations and the margins they are getting from shoe business has to be much higher. This video is brought to you by SmartInvestor. Like our videos, share our videos, subscribe to the channel. Click on the bell icon for new video notifications. This video is for education purpose only. For any investment decisions, please consult your financial advisor. Thank you.